Good evening, everybody. Welcome to this evening's ACY Securities webinar. My name is Duncan Cooper. Thanks for attending. Okay, but just before we move along, can you just read through the risk disclaimer? And while you're reading that, if you have any questions throughout the webinar, just type them into the Q&A box, and I'll do my best to give you a clear, concise answer. There's a chat box as well, but if you can try to stick to the Q&A box, that will just help me. Thank you. All right, let's move along. So a little bit about myself. My name is Duncan Cooper. I'm a full-time Forex trader. I've been trading the Forex market for more than 15 years and mentoring clients for the last 10 years or so. And very much welcome the opportunity to work with ACY Securities. If you want to contact me, you can get me at education@acy.com. And over the last, I think it is now 4 weeks we've been going through a beginner webinar series for those that have been attending. And we've covered these topics at the moment. And we've also covered MACD and average true range and session opening times last week. Tonight, I'm going to go through a trade setup that I've kind of been touching on as we've been piecing things together. So this evening, we're going to go through a trade setup and its components called the Trendline Break. On Thursday, I'm going to go through a session on bringing it all together, where I'm going to bring all my tools together and go through a concept called support and resistance zoning. So hopefully you'll continue on from this evening to that webinar as well. And then next week, we're going to go through trade setups called swing point break and also limit order at a support or resistance zone. So once we actually get to the end of this webinar series, I'm then going to take you through some live market analysis webinars for a couple of weeks. And then we're going to go through the series again. So for those that have come in halfway, you'll be able to pick up the beginning webinars. For those that of you may be still a bit confused about certain topics or you need a refresher, then you can revisit the topics as I go through them once more. All right, so let's get into tonight's topic, trade setups, trendline break. So as I said, if you do have any questions as we're moving through, then just shut up a question or two. So this evening's presentation is on trade setups, trendline break. And just read through the risk disclaimer for those that have come in late. All right, let's move along. So this evening, we're going to go cover trade setups, trendline break. And this is the overview. So trade setups, what they are. We're going to go through what I call the trendline break MACD cross setup. I'm going to cover stop loss levels, profit target levels for the trade setup, and then we'll go to the charts and hopefully we'll see some setups that they might not be setting up right now, but I know there's been some trend line breaks occurring. We'll go through and do some analysis on the charts, and any questions that you have, we'll cover. All right, so getting your trade setups. A trade setup in its basic form is a set of rules. When the rules are met, they form a trade setup. Your rules for a trade setup should be clear and easy to follow. There should be no ambiguity or guesswork. The more mechanical the trade setup, the better. So we're going to look at trading a simple intraday trade setup. The setup is rule specific, and before I do move along, what I would encourage you to do is, if you don't have a trading plan, a written one, it's basically just a set of rules that you're going to follow to take a trade, then start to think about, I'm going to give you rules here to follow. You can incorporate those into a trading plan and then start to follow that if you don't have a trading plan already. Okay. What you don't want to be doing is just following a haphazard way. You follow some rules one day, you follow different rules the next day, and you don't know what's working. So I really encourage you to have a written trading plan. If you don't have one, make one. So the setup is real specific. Trade setups will be identified and executed on the 15-minute chart in line with the day chart trend. I've discussed that I like to follow the day chart trend. Get my PowerPoint to move along. Sorry. Okay, if the day chart trend is up, then we're looking for a buy trade setup at a pivot point that is acting as support. And if the day chart trend is down, we're looking for a sell trade setup at a pivot point that is acting as resistance. Okay, so my first big rule is, what is a day chart trend? That is going to be my bias for the trading day. And I've covered the mega trend before, but if you don't know what it is, well, you'll have to catch up at some point. But if you're new to trading, use the mega trend to identify the daily chart trend. And I'll pull that up a little bit later and quickly go through it. This will ensure that you're trading a currency pair that is in a strong day chart trend. You're always going to have better outcomes if you're trading a pair in a strong trend. Okay, so if you're struggling identifying the trend or working out what is it or not in a strong trend, then just use the mega trend. And if you cannot find a currency pair that is in a mega trend, then don't trade today. We don't have to trade every day. I think traders, I've had the pleasure of teaching many traders, and everybody thinks, or a lot of traders think, that they have to trade every day. I don't trade every day. I may be in a trade already from a day before, so I am trading, but I'm not necessarily executing and opening trades every day. Okay, so with the pivot points, and if we have a trend that is up on the day chart, then we don't want to be executing trades that are too high up into the resistance sell zone. So if I get my little drawing tool here, so my day chart trend is up, and then I'm dropping down to the 15-minute chart to look for support at a pivot point, to look for a setup to trade upwards. Then I certainly don't want to be looking to execute trades up here for a buy. Okay, ideally for myself, I like to be looking for trade setups that are commencing, might be moving down to the central pivot point, and then I see a trade setup moving up off the central pivot point up into the resistance sell zone to take profit. Ideally, in a perfect scenario, I'd much prefer to be executing a trade down here as price turns around in the support buy zone, and then trading up this way. Okay, so I don't want to be executing my buy trade setups too high up into the resistance sell zone. Okay, at the central pivot point, great, or even underneath the central pivot point when I'm looking at an uptrend. I'm looking for a buy trade. Okay, let me just clear all that off. All right, and then if we're looking for a sell trade, so that's for example, the day chart trend is down, it's just the opposite. All right, so great if I can execute a trade setup close to the central pivot point and sell to move down into the support buy zone. I've got my drawing tool again. I do not want to be selling down here. This is where I want to be getting out of my trades for profit. So great if price holds at resistance at the central pivot point, starts to turn down. Getting an execution of a trade around this level here would be great. Or some point of failure up here would be great. In line with the day chart trend, which is down. Seeing a trend line break and then trading all the way down this way. Okay, so higher up the pivot point range, the better if we're looking for a sell trade setup. All right, so let's get into the trendline break MACD cross setup. So for a buy trade setup, the day chart trend is up. On the 50-minute chart, price is at a pivot point that is acting as support. And we get a trendline break. Candle closes 3 to 5 pips above the current declining resistance trend line. And incorporating MACD, the blue MACD line crosses above the red signal line. Okay. So I'm looking for all that criteria for a buy trade setup. So you can incorporate that into a trading plan. All right, so what does it look like? So this is my hypothetical 50-minute chart. I'm getting support down at the central pivot. And then price action, I've got my trend line drawn, got my declining resistance trend line there in place. And we get a break above. Candle closes 3 to 5 pips above the break of that trend line. And as well, the blue MACD line crosses above the red signal line. So if I've got that on the close of the candle, I can then take a trade entry. I can do what we call a buy market order, just buy at market. And if I get my mouse, I'll be putting my sell stop loss order underneath this swing point low, 1 pip below. And then I'm going to be putting a sell limit order above to take profit. And I'll talk more about targets a little bit later. But once I've got this criteria, I can enter buy stop loss underneath this swing point low, put my target further up the chart, okay? So here's a chart example of the criteria coming together. So the day chart trend is up, first of all. We're getting support where the green arrow is at pivot point, putting our trend line in. Eventually, the MACD crosses up above the red signal line, and get my mouse back. Here we are. Price action closes 3 to 5 pips above the broken trend line. We can do a buy, and we can see over the course of time, price moves up. All right, so that's it on a chart. Now, it doesn't matter which happens first, whether price crosses the trend line first or the MACD crosses first. But it doesn't matter which one occurs first. You need both before you have the criteria for entry. All right, so it's not one or the other. You're looking for both. So you might get a break of a trend line, but your MACD hasn't crossed yet, or vice versa. Your MACD's crossed, but your trend line hasn't broken yet. So in terms of this entry style, I'm looking for both to occur. All right. So you might have to sit on your hands for a couple of candles before everything comes together. All right, so for a sell, it's really just the opposite set of rules. For a sell trade setup, the day chart trend is down. On the 50-minute chart, price is at a pivot point that is acting as resistance. Trendline break occurs, candle closes 3 to 5 pips below the current rising support trend line. And the blue MACD line crosses below the red signal line. All right, so here's the hypothetical example, 50-minute chart. Price has been moving up and it comes to the central pivot point. Starts to find resistance. We've got our support, rising line of support trend line drawn in. We get a break of the trend line. The candle closes 3 to 5 pips below. And we've got a MACD cross at the top there. All right, blue lines cross below the red line. Now on the chart, the MACD is actually at the bottom of the chart, but it's just up there just to help with the following slides. All right, so if you have the criteria, then you can sell at market and you put a buy stop loss order above the high point here. This would be 1 pip above there plus the spread. And then below the market, you have your buy limit take profit order, okay? And we'll go into profit targets a little bit later, how we work them out. So here's your 15-minute chart example. Day chart trend is down. And then we get resistance at a pivot point. We get a trend line break, candle closes 3 to 5 pips below the trend line, and we get the MACD cross down at the bottom. And we've got our trade entry. Now, I'm saying 3 to 5 pips closes above or below. In this example, it's below. What I don't want is, I want it to be closing 3 to 5 pips below. So I know that we've moved nicely through the trend line. But what I don't want to see is that it's moved like 20 pips below, close 20 pips down, because that's just moved too far. If that occurs on any setup that you're monitoring, then you probably just missed the boat on that setup because it's already moved by the time you get your trigger to take a trade. So I'm using the 3 to 5 pips to confirm that we've got a good break, but I don't want it to have moved too far that I'm giving away a whole bunch of profit that's already occurred, okay? So I have to be able to follow rules and be disciplined and say, okay, well, it's 3 to 5 pip break on the close, not 20 pips, because that's just moved too far. Even 10 pips has moved too far. So for me, if it's just 5 pips below, great. If it starts getting beyond that, I'm probably going to leave it alone. So I'm already losing potential profit that's moved with the trend. Okay. All right, now let's get into stop loss levels. This is the buy example, but you just flip it for a sell example. All right. So the risk on the trade is the distance between your trade entry and the level that you put your stop loss at. In a buy example, your sell stop loss order goes 1 pip below the swing point low. And what you're risking is the amount of pips from entry to your stop loss level. All right. So my rules for stop loss risk in terms of pips, ideally we do not want to risk more than 20 to 25 pips on a trade. If a trade setup requires you to risk more than 25 pips, I would pass on the trade, just with one exception. Sometimes the market's very volatile, like when we had the global financial crisis or when the coronavirus hit 12 months ago and the market became very volatile. Then if the market, normally a currency pair might move 75 pips to 100 pips in a day, but when you're getting movements of 200 to 300 pips a day, you probably won't be able to find a setup that you can get for 20, 25 pips. So in those instances, you might just have to expand that based on the volatility. But, for me, if I was risking 20 pips on a trade, I wouldn't be risking more than 1 or 2% of my account. So even if I'm risking 50 pips on a trade, I still wouldn't be risking more than 1 to 2% of my account. I'd work out what trade size I would need accordingly to still have a limited risk on the setup, okay? But generally speaking, if a trade setup requires me to risk more than 25 pips, using this setup, I would pass on the trade. Just go and look for another one. All right, so look for another trade setup with a smaller pip risk. And that can be hard if you've been waiting a while for a trade setup and then you see something set up, but it's all about being disciplined. Profit targets. This is very, very important. When identifying a potential trade setup, we need to consider how many pips we're going to target on the trade. And ideally, we want to set our targets so that we have a minimum risk to reward of 1 to 2. You cannot be setting your trades up with a risk reward of 1 to 1, where you're risking, say, 20 pips to gain 20, because if you're wrong 50% of the time, you're never going to make any money. All right. So you must have a risk reward of 1 to 2. if you've got a risk reward of 1 to 2, and most of the times when you're right, you're making your 2 target, but you're wrong 50% of the time, you'll still make money. But if you don't set it up this way, where you've got a minimum of reward of 1 to 2, you'll find it very difficult to make money. I mean, in an ideal world, you want a risk reward of 1 to 3, 1 to 4, if you can do it, depending on what trade setup and how you're trading. But as a minimum, I would say you must set up 1 to 2. So if we're going to risk 20 pips on a trade, you need to target 40 to give you a risk reward of 1 to 2, okay? So a trade setup might look good when it presents to you, but is a 1 to 2 risk reward profit target achievable? So we see a trade setup and we think, oh, this looks great. And we just take it. We're not considering everything before we take the trade. So I would not set a profit target that is beyond high time frame support or resistance. So if I've got, for example, a 4-hour or a daily resistance or a weekly resistance level ahead of me in a buy trade, if I have to get beyond those levels to make my 1 to 2 risk reward, I might be asking too much, because price might stop at resistance and then I can't get my 1 to 2 target. So I would not set a profit target that is beyond high time frame support or resistance. And as well, we covered this last week, today's projected high or low. If my target that I'm setting is going to be beyond today's projected high or projected low, then my target is probably not achievable. So why am I going to set a target that's not achievable? I'm just going to have to say no to that trade, okay? And as it says there, there's a high chance that price will not exceed these levels and reverse. All right, so just because you want it to break through support and resistance or go beyond today's average true range, probably it won't. So there's certain rules that the market is probably going to adhere to. And if you're trying to trade based on the fact that those have to be broken, you're probably going to be wrong more times than you're right. So pass on the trade and look for a trade setup with an achievable target. So I always want to be taking my profits ahead of high time frame support or resistance and ahead of today's projected high or low, or at today's projected high or low. Okay. All right, so that's the end of that module. Now, just want to go back just a couple of slides and just talk about trade management. Just bear with me a moment. Okay, we'll just use this slide here as an example, just to give you a few rules for trade management. So let's just assume, let me get my drawing tool, that I'm risking here 20 pips. I've just bought up here, and my risk is 20 pips. And the distance, this isn't drawn to scale, but let's assume that the distance up here is 40 pips. So what I like to do is, when I'm up 20 pips, so whatever I'm risking, in this case 20 pips, when I'm at what I'm risking, I'll move my stop loss to my entry level and get the risk out. So let's assume price is doing its thing. It's coming up, hits this level, 20 pip mark of profit. I will then move my stop loss up to my entry level just here. Okay, not the best drawing, but you get the idea. Then when I'm up, so I've got 20 pips to go from this level to my target. So when I'm up, half of this distance to go, so in this case 10 pips, 20 pips to go, so half of that's 10. So when I get up 30 pips, what I'll do is this stop loss here. I'll move it up and lock in 20. So when I'm up 30, I've locked in 20. And then price is either going to go up to my limit order and get me out for full profit, 40 pips, or it'll pull back and I'll make 20 pips. That's how I manage the trade. Okay, so that gives you some rules there. So let me just clear that all off. Here we go. So 20 pips of risk on the trade, plus 20. Get the risk out of the trade. This is the most important thing about your trade management. Once you're risk-free, theoretically, you could do nothing and price could just keep going up for the rest of the day. But you must, at some point, have a rule to get your risk out and then have some form of rules of how you're going to start to lock in some profit. Now, your rule might be, once I'm up 20, I'm going to get the risk out and then I'm just going to leave it alone and hopefully it'll just hit my target, that full target. And if that's what you want to do, fine. But monitor what works best for you, okay? But you will need some kind of rule to lock in profit, and I gave you a good idea there of what I genuinely will do. All right. Okay, let's clear that off. So any questions, just type it in before we move to the charts. So if there's anything that I've covered there that you're unsure of, then type it in. Tomorrow you will get a full copy of the presentation by email, so you can review. And as well, before we get into the charts, you should get a link to download a raw file, so you can upgrade your charts to my charts if you wish. So my charts look like this, if you haven't seen them before. It's not a standard download from the ACY website, but I go to my desktop. Here you go. That's just on my other screen. All right, so I've just opened up a raw file called MT4 webinar configuration. You can download that tomorrow when you get the email. If you open it up, there's some folders here that you just need to move into the location of the platform. But there's a PDF here that tells you how to do it, and there's also a video. So if you just watch the video, it's like 2 minutes long, and then just follow along and do as I do. You shouldn't have too much problems in upgrading your platform to look like mine. And all it's going to do really is on the toolbar itself, it's going to add a few extra buttons in I use, and it will configure them to how I use them. In this templates drop down, there'll be my templates, which are indices, megatrend, pivot point, daylight saving, and pivot points. It doesn't override anything that you've got there. And as well, down at the bottom, in the profiles, you'll get my profiles, 12 pairs daylight saving, indices, and megatrend. Again, it doesn't overwrite anything that you've already got in the platform. And I've got a question coming in. All right, I'll just get to the question in a moment, Ash. So just as I'm talking about the platform here, I'm using tonight, and as it's daylight saving in the Northern Hemisphere at the moment, I'm using the charts that are called 12 pairs daylight saving when I'm looking for setups. When it's not daylight saving in the Northern Hemisphere, I'm using the 12 pairs. All right, so just cover that with everybody. All right, I just got a question. Do you keep chasing the stop loss higher if the market continues to climb in the right direction? Well, if let's say that example I just gave you of a 20 pip stop and a 40 pip target, when I'm at plus 20 and move my stop up to break even. When I'm up 30, I move it up to plus 20, and I've got my target, my exit order there at 40. Now, and what you're saying is, yes, I could continually move my stop loss up, but if you've got an order there to get you out further up, you're going to hit with that before you can keep moving your stop up. Now, what you could do is you could have it so that, let me just go back to that PowerPoint. So you could have it so that you don't set a limit order here to take profit. And as price is moving up, you keep moving your stop loss up periodically. And then at some point, price will turn back down and that'll take you out. You could do that. I think that's what you're really getting at there, Ash. So yes, you could do that. But if you've got a target order here to get you out, eventually it's either going to hit your stop or the target order. Yep. Does that answer your question? Yep, great. Okay. Right, so let's get to the platform. So I have had a look around the charts. And what I will actually do, for those that haven't seen the mega trend before and might struggle with trend, and what I suggest you do at the start of the day, I've still got plenty of time, so I can take you through what the mega trend is. So the profiles down here, just select the mega trend. You'll find the 12 currency pairs that I've got set up. These are all day charts, and we use the mega trend on the day chart. So if I bring one up, I'm going to bring up the euro dollar because this one is in a mega trend at the moment. It's got two bands on here which operate kind of like Bollinger Bands, and they're set at a certain setting. And what we're asking ourselves is at the start of the new day, so this is the new day just here, did yesterday close above or below the bands? Now, if it's closing below the bands the day before, then we have what I call a strong downtrend. In this case, that's called a strong mega trend downtrend here. If over here, for example, this candle here closed above the bands, then we have a strong uptrend, strong mega trend. And then I'm just looking for opportunities to buy on a setup. So if the previous day closes above the bands, I'm in a strong uptrend and I'm only looking for setups to buy. If the price action is closing on the day chart below the bands, I've got a strong downtrend now, and I'm only looking for sell setups. Okay. If price action, if you struggle with trend, then if price action is in the bands, you don't really have a strong trend. So go and look at a different pair. Okay. So I've got this set up for 12 pairs. So have a look at all 12 and see which ones are in a mega trend or not. Now the euro dollar it's in a downtrend. If I go back to the small view, this is the Aussie yen. That's just in between the bands. If it's closing on top of the bands, I like a nice close below. I don't want anything that's ambiguous. So the Aussie is really closing on the bands here. Closing on the bands for the euro pound, within the bands on the euro yen. It's closed below the bands on the euro dollar. On the pound yen, it's within the bands. And yesterday we just closed below the pound. So theoretically, yes, it is now in a mega trend down. Only just, but it is. And we can see we're having a negative day. New Zealand yen is within the bands. The New Zealand dollar is closing, so 2 days closing below the bands. Dollar Canadian, we've had 2 days closing above the bands. Dollar francs within the bands. Dollar yen, we've had 1 good day closing above. We can see it's making a new high relative to the last trading day, so it's still moving up. So that's in an uptrend as well. All right, so that's how I look at it. I'm looking at yesterday's candle. Did it close above or below the bands? If it's a little bit ambiguous, it's like, you know, is it below or is it on the line? I'll just wait another day. So you can use that for trend. So it's either in a mega trend up or down, or it's not in trend at all. So just look at the ones that are in trend. And there's not many that are in a steep trend at the moment. Some of them may be just starting to move into trend, like the pound dollar here, like the Canadian dollar here. All right. So if we go and have a look at the charts, let me just make a note of which ones we said were in trend. I think I said the euro, US dollar, pound, dollar, So those two were both down. New Zealand dollar's down. And dollar Canadian's up. Now, it's not to say you can't trade any pair that's not in a mega trend, but this, if you struggle determining what trend is, in terms of higher tops and bottoms and lower tops and bottoms, or you can't really work out, is it in a strong trend or not, just use the mega trend. All right, let's go to the 15-minute charts, 12 pairs daylight saving. And let's start with the euro dollar. Now, we did have a little bit of a setup here yesterday, but in terms of today, so we know it's in a downtrend. So we're looking for an opportunity to sell if we can find one. Now, it has been in the sell zone of the pivots. So high up in the pivots for a sell is ideal. And then we need to draw in the most immediate broken support trend line to see if we've had a setup form. Now, there was a trend line coming up through here. We got resistance forming at the M4 pivot. We did get a trend line break, and the MACD cross didn't actually occur until the close of this candle just there. Now that is, it's about 9 pips below the break of the trend line. And as I said to you before, I want 3 to 5 pips below, not 9. So for me, that's moved too far down the track already for me to take a trade setup. All right, but what you could do, get your charts. I'm just going to draw in a little marker there. Close of that candle right there is where you could have executed a trade in terms of where the MACD crossed down. And yes, we've got a break of a trend line, but it was just a little bit too far down. Now, if you did sell there, you would have been risking about 20 pips. Once we factor in 1 pip above the high plus the spread, around about 20 pips. So it's in the ballpark of how many pips we can risk. I just don't like the fact that it's moved a long way down from the break of my trend line, but just having that mark there, it's around about 120, 130. You can just monitor that for the day and just see how it moves down. You know, if you did take a sell there, even though it's a few pips, maybe too far down the track, for ideal, I like a break of a trend line, 3 to 5 pips at that point where I can take a trade on the close of the candle. It's just a little bit too far down to be perfect. Over here, yesterday, trend line break was around about where I've got the crosshairs. You would have only needed to risk 10 to 12 pips. And it didn't perform that great, but you wouldn't have lost money. You would at least got the risk out of the trade if, you know, you may have just decided to lock some profit in and get out. All right, so it wasn't a losing trade. Certainly saw some profit. Here at the moment, if you did take a trade, you'd be up about 5 pips at the moment. All right, next pair was a pound dollar. And we've said it's in a downtrend. Now, I do like it to fail. Let me just go to my, just want to get rid of that fib. So we're not talking about fibs today. We're just talking about trading off pivots. All right, back to my 15-minute chart. Okay, I like it when it fails at a pivot rather than short. So if I just mark in here, might not be that clear, but the higher the candle is around about there, and the pivots, you know, pivots about 3 pips further up. So I'd much prefer it to be failing at an exact level of pivot resistance before looking for a setup. So in this example, it's not quite giving me what I would like to look for. Trend line, the last trend line you could draw that got broken would have been that one. The swing point low here to that one before moving up. And then eventually you got a MACD cross on this candle. and it did close 3 pips below there. So if you did decide to trade on the close of that candle, that's the level. I know I've said it wasn't the perfect resistance up here, but if you did, just trying to get my trend line so it's nice and straight. If you did take a trade at that level, well, you can see that it's working out profitably. The risk on the trade was, it's about 23 pips. The trade at the moment's up 32. Okay, so you should be risk-free on the trade by now if you're in that trade. All right. In terms of where the projected low is for the day, you can see it comes in about, we're risking 23 pips. You need a target 46, and down to the low of the day, it's about approximately 60 pips. So there's ample room down to today's projected low. Okay. The one thing you would need to consider is where it is daily support. There's daily support here. So you should have had that in at 140.63. So you knew that was coming down the track. Support. That could get in the way of your trade. So let's go back to the 15-minute chart and see where that comes in. So if you're risking 23 pips, you need 46 pips of space. And there's about 45 pips. So if I was needing to target 46 and there was 45 pips, I'd probably take that trade, because price might just bounce into or through that level of support and bounce back up. But, you know, if my level of support was here, where, you know, risking 23 pips on the trade and there's only 20 pips before I get there, I wouldn't take the trade. All right, hopefully that's making sense to everybody. So again, you can monitor that one. You've got my charts already, or if you don't have my charts, I can tell you there the entry came in at about 141.08. All right, hopefully that's making sense. New Zealand dollar, let's have a look at that one. All right, I've already drawn the trend line in because I was just monitoring this one before. So we've said that the day chart trend is down. It's in a mega trend. And I'm just going to take it to the day chart so we know where support is. So there's a definite level of daily support here. 71.25. Now there are some more levels, but if I'm setting a profit target, I need to be setting it before the first one, because I can't say to myself it's going to break the first one, but it might not get to the second one. It might not break the first one. So that's my daily level of support. That could be a definite barrier to me getting to a profit target. Let's have a look. Where does the, so we're about 1 pip short of the pivot. So that's good enough in terms of resistance. I'm getting close to the sell zone where I would be expecting selling pressure. Trend is down on the daily, so my bias is to be a seller, okay? So this red candle here is where we get the cross on the close. So it is around about 9 pips down from the break of the trend line. Again, I'd like it to be a little bit closer, but my stop would go 1 pip plus the spread above. The spread's about 1 pip. So you'd be risking, even if you took that a little bit further down from the break than I'd like, you'd only be risking a maximum of about 14 pips. Okay. So the entry is at this close just there. That's at 71.49 approximately, with about a 14 pip risk. We've moved down at the moment 16, so we could be risk-free now. Did we have, if we're risking 14 pips, we're going to target 28 to get risk reward of 1 to 2. Now, I don't think there is 28 pips. There's only 23 pips to your level of daily support. Now, the thing to consider is, let's just forget that we've maybe entered this trade at the moment. And let me just do something here. All right, price action is there. You've already drawn in your level of daily support before the trade sets up. Now, if you look left, you're looking over here, but then you look left at this daily level of support that you drew in. Yesterday, it held at daily support. That was Monday. The day before, it tried to get below that level of daily support and then came back above. So it's told you for 2 days that that level of support is holding a support. So if you're going to set your target beyond that level, you might have difficulty meeting your target. All right. So for me, yes, we're seeing profit as it's moving down, but can I get my 1 to 2 target? You must have a 1 to 2 target that you can get before support or before you get to today's projected low. It's down here, projected low. So in terms of the projected low, there's 43 pips. There's about 41 pips from the entry point to that low projected. So that's fine. The question about this trade is this level of support. Now you can monitor that. That level of support is at 71.25. Now it may well break down through there. Now you might have some other things that you're factoring in, which might allow you to say, okay, I'm going to set my target beyond that because I think support will break because of these factors. Okay. So if you've got other things that you're factoring in, that's fine. But as a general rule, I will try to have my targets before support. Right. But in any event, if you are going to set your target below a level of support, if you've got a good enough reason, and it has to be a good enough reason, I would make sure that by the time price gets to support, my trade would be in a position where I'm at break even. I've been able to move my stop loss down and get all the risk out of the trade. I don't want to be bouncing off support, still risking the trade. So if it bounces off support and moves back up, the worst thing that can happen to me is I just get out at break even. I don't want it to bounce off support and give me a losing trade. Okay. So at times, yes, I might put my target below support if I've got other reasons going on, but I would want to get my risk out as it's hitting support so that if it does just bounce straight back up, you can see here yesterday, it bounces straight back up. It bounces up to my entry level. So I would then be moving into loss over here at that level that we're discussing today. And then it moves further up. I'd be going into more loss. So I don't want to be seeing price bounce off support and take me into a loss. Take me out of the trade at break even, fair enough. Okay, hopefully that all makes sense. All right, the last pair in a mega trend was a dollar CAD. So we can see that's moving lovely. So let me just clean my chart off from anything else that I've been doing. So we know we're in an uptrend on the day chart. Even price action is telling me that because we're broken above the last lower top here. And the MACD is up. So using the tools that we've been discussing in previous webinars, second webinar was market trend, just pure market trend, we're broken above the last lower top. So we are in an uptrend on the daily. MACD is clearly in an uptrend as well. Okay, so if you understand all that, this is in an uptrend, irrespective of the fact that it is, yes, a mega trend. So my bias is to look for a reason to be a buyer. So there is a bit of resistance here, which we need to put in case our profit target would be beyond. So That's at 121.77. And I could put more resistance in if I wanted to here and here, but I need to be getting into my trade and getting out of it before I'm hitting the first level of resistance for the day. So I've got that in. Support, I would use this high here on the day at 121.33. I'll go down the 4-hour chart as well and just see if there's any resistance or support that might be conflicting. All right, so what we've seen is that price has moved down to that daily level of support there. Put in some 4-hour support here. Now, as it's moving up, there was a level of 4-hour resistance there that might as well just be in the way of the trade. So let's mark that in at 121.71. All right, so we're into this is where Tokyo starts. This is where the new day is starting, and we can go to mega trend charts and see what the trend is, and we've seen that it's up. So then we're just monitoring what's going on now. This is a level of day support that the market held here, came down into Frankfurt, London, got a little bit below the pivot, and then started to move back above. So we would have had a trend line. There's a swing point here. These two candles look kind of even. And again, these two candles look kind of even, but there's a swing point there. So I'll just use the far right because it's just easier to draw. So from the far right candle there to the far right candle there, drawing it down and through, we get a break of a trend line. Daily support is starting to be support. We get cross. Now, if you just looking at the histogram here, this is these blue things, blue bars, is, you know, you've got a cross of the MACD up when you have a blue bar above the horizontal. Cross down is when you have a blue bar below the horizontal. So the first blue bar just comes in just there. So it's that candle just here. And that's closed. That's closed 3 to 5 pips above that trend line break. You get your MACD cross on the close of that candle just there. I'll just highlight that with a line just there. So the risk on the trade, 1 pip below the low, it's a very small risk. It's like 6 or 7 pips. That's quite small for me. So I would probably just go down 10 pips. Give myself a little bit of room for the market to fluctuate. Okay. But in any event, I'm only having to risk 10 pips, even if I do that. All right. So I only have to then risk, if I'm risking 10, I only have to target 20 up here. 20 is only to this pivot point just there. All right. So we can quite clearly see that that gets met very easily. Now, Ash, you had the question of, can I just keep moving my stop up? You know, if you're risking 10 to target 20, you might not put a target in. You might just monitor it. When you're up 10, get the risk out, and then you might leave it alone for a while because, you know, 20 pips isn't that far for the market to move. And we can see here from our entry point, heading up to 4-hour resistance or daily resistance, up to daily resistance is like 42 pips from your entry. So if you're risking 10 and you target up to there, target it just at the start of the red sell zone of the pivots with daily resistance up there, this would be a great level to take profits at. So that would actually be a risk reward of 1 to 4 if you use that as a target for your trade. All right, so you must have a target of at least a risk reward of 1 to 2. But in this case, if you're only risking 10, today's projected high is going to come in all the way up here at 21.89 approximately. That's 55 pips up from your entry. So from your entry, risking 10, possibly targeting it all the way up to there if you can get beyond this daily resistance. I mean, you can see at the moment, we are holding at daily resistance. It's just pulling back a bit. If we do meet today's projected high though, risking 10, targeting, what did I say? Up to the high of the day, 55 pips. That's a risk reward of 1 to 5.5 approximately. That's great. You know, if you're risking 2% on the trade, you could potentially make 10% in a day if you had the forethought there to target today's projected high. Now, we don't know if it's going to get there. We're having to ask the market at the moment to move through 4-hour resistance and daily resistance. We are heading into the red sell zone, so we know that selling pressure could come in. So if I was still in the trade, I might just have my stop. You can use these pivots for stop levels. At the moment, we're testing the M4 pivot. We could have our stop at the pivot below R1, just here. Now, as long as it doesn't come back to that pivot, because we've broken above that one, it might just keep going up. All right, so you could progress your stop in this scenario. We would have started just underneath the low here. When we're up 10 pips, get it to your entry. Then you could have said to yourself, well, if it breaks above this pivot, it might get to this pivot. If it does, then I'll just move my stop to this pivot. Once price gets to the next pivot, I'll move up to the next pivot. So on and so on. So we're up to the next pivot at the moment, so our stop could be here. Now you could do that all day long, and at some point price will turn around. You know, or you could be getting out up here at today's projected high. Now, if this doesn't want to go through here, you might want to jump out and lock in as much profit as you can. All right, so that's another way that you could be managing the trade. So we have seen, we get to the top of the hour, so just before I conclude, we have seen, using the rules that I gave you, this was a little bit too far down for my liking, but it is showing profit on the euro dollar. Pound dollar, this is working out quite nicely. From entry, I think we were risking about 23 pips, and currently it's up 34. So that's working out nicely. You wouldn't be losing any money on that for sure. New Zealand dollar. This was a bit questionable because your profit target would have to be below support, but if you did take it, it is working out, certainly to the point where you'd be at break even and not losing any money. And the dollar Canadian, well, that's just going gangbusters. Just with a 10 pip risk, you could have actually risked less than that. So at the moment, price action, as you can see, is moving beyond daily resistance now. So, you might just move your stop up just below, if I can get hold of it. Oh, no, it doesn't want to. It won't let me move it. I don't know why. There we go. You might just move it just underneath the 4-hour support now. Now, I've identified tonight possibly 4 trades, but I'd probably just be taking 1 trade at a time. And just because there's 4, don't take 4, because then you're probably trading correlated pairs. You're probably trading too much risk on your account. So try to pick the strongest pairs, first of all, in terms of trend, and then look for the best setup. Some of those setups had on the New Zealand dollar, there was support in the way, so I'd probably veto that one. I think the euro dollar entry was a little bit too far down the track for me, so I'll probably veto that one. This dollar Canadian was like perfect. You only have to risk about 6 or 7 pips if you wanted to, but I would probably risk 10. And that's going gangbusters at the moment. in terms of small risk, large gain. All right. So before we conclude, is there any questions? Hopefully you found that valuable. On Thursday, I'm going to go through support and resistance zoning, showing you how you can come up with really rock solid, high probability trading levels. So we will be using pivots, but we're going to be combining pivots with our other tools to get really strong levels that you can trade up, off, or down from. And I'll show you how I do that every day on Thursday. Right, so I'll just give you a minute to ask me a question. If I don't see anything come in a minute's time, then we'll just conclude. So thanks to everybody for attending. All right, it doesn't look like there's any questions coming in. So thanks to everybody for attending this evening. Hopefully you found the information valuable. And I look forward to seeing you on Thursday. So have a great evening. Thank you.